Salesforce stock, ticker symbol CRM, is down 24% in the past year, and in this video I am going to do an in-depth analysis of the company by looking at the financials, the forecast, some important statistics, using my spreadsheet to calculate the intrinsic value of Salesforce, as well as looking at the main risks of investing in this company. Starting with their financials, their revenue has grown pretty consistently over the past 10 years, going from $6 billion all the way to $39 billion currently. However, their revenue growth has slowed down in the past couple of years. However, analysts are expected to keep growing revenue, and they are expected to keep growing at around 10% per year and reach $60 billion in 2030. Regarding profit, their free cash flow has also grown very consistently from $900 million 10 years ago, and it is currently at $12 billion. Regarding EPS, analysts have them growing to $17.99 per share in 5 years, so still a lot of growth expected regarding profit and revenue. Moreover, Salesforce has amazing margins, with gross margin being at around 75% over the past 10 years, and free cash flow margin has improved a lot, and it is currently at around 30%. Then, in order to calculate the intrinsic value of Salesforce, I use my spreadsheet. This tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $177 per share, middle $255, and high $369. And the stock is currently trading at $252 per share. So this means that if my low assumptions occur, you're going to make a 2.9% annual return on your money, middle positive 10.2%, and high 17%. And I believe my assumptions are reasonable, as I have the company growing revenue between 8 and 12% annually for the next 7 years, which is what analysts have them doing, averaging a profit margin and free cash flow margin between 20 and 30%. Again, this is what they have been doing, and I assigned a PM price to free cash flow at the end of the 7 years of 16, 18, and 20. If you want to do your own assumptions, I'm going to leave a link in the description to the spreadsheet. It is super simple to use, as I've done all the calculations in the background, so you only need to put your assumptions. So it seems that the company is fairly valued. Moreover, if we take a look at the valuation ratios, the stock is currently trading at a forward PE of 21 and a price to free cash flow of 19. So again, I would say it is fairly valued. Now let's take a look at the two main risks of investing in this company, which are the reasons why the stock is down. Number one is the weak near-term outlook and soft guidance. So Salesforce Q3 revenue forecast, which was $10.4 billion to $10.29 billion, came in below analyst expectations, signaling slower demand for its AI offerings, particularly Agentforce. And number two is the market sentiment around maturity. So Salesforce was once a rapid growth leader, and now it faces investor pressure as it grows slow into single-digit territory. So the question is the high valuation now justified? In my opinion, these are short-term risks, and I believe it doesn't affect the fundamentals of the company. And I believe the stock is fairly valued, and therefore I am personally going to wait to see if I can get the stock cheaper. I hope you found this video valuable. Let me know what you think about Salesforce stock in the comments, and I'll see you in the next one.